What is going on, YouTube Nation? This is Stark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. I plan on having daily YouTube videos, and I'm going to try to post a lot of shorts. So if you're new to this channel, you got to capitalize on it, smash that like button, and hit that notification bell after you subscribe, because I'm going to be busy on here. So I mentioned to you guys that I would be buying a REIT, a specific REIT, a high yielder. It struggled a little bit post-pandemic, and I'm capitalizing on it. I'm going to review it. I'll go over a little bit in depth with them, why I like them, and why this may be a buy and hold forever real estate investment trust. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check out this REIT right now. And that REIT is known as Four Corners Property Trust, sitting at 2861. The average volume is 705.66K. The market cap is 2.65 billion US dollars. Year range is 20.51 or $20.51 to 30.93. Day range is 28.34 to 28.78. Previous close is 28.67. So I'm going to go over them. So in November 2015, FCPT, which is a symbol, was spun out of Dividend Restaurants as an independent publicly traded real estate investment trust, or REIT. Since the transaction, FCPT has grown steadily while maintaining one of the highest quality net lease portfolios in the industry. FCPT continues to expand its national footprint, focusing on the long term, creating continued value for its shareholders, and investing in its people. So we're going to go a little bit more over them. So their strategy is to grow and diversify their portfolio through acquisitions of properties leased to quality retail operators. 1,132 properties they have. They have an occupancy rate of 99.6%. That attracted me. 154 brands, 47 states, 7.6 million, 7.4 average lease term in years. So their breakdown by brand, they have 314 leases of Olive Garden. That's 36% of their portfolio. Olive Garden's always busy. They have 318 leases in 57 brands or other restaurants, 116 in Longhorn, 148 leases in 30 brands of auto service, 82 leases in Chili's, 97 leases in 35 brands in medical retail, 26 leases in other Dividend, 53 leases in 25 brands in other retail. So we're going to go over them geographically real quick. They're greater than 10% in Ohio. They're greater than 10% in Texas. They're greater than 10% in Florida, greater than 10% in Indiana, greater than 10% in Illinois. So that's very attractive for me. Or am I seeing the color right? I think that is based on the color of what I'm looking at. You can correct me if I'm wrong, but that looks like, based on their color, their geographic location, they are greater than 10%. We're going to go a little bit more in depth. So looking at their investment criteria, they look for net lease restaurants, auto service, collision repair, convenience stores, and medical retail. Their deal size varies by opportunity, but includes single properties or portfolios from 1 million to 300 million. Geographical location is nationwide. Demographics is greater than 25,000 and a 3-mile population. Lease term is negotiable, greater than 5 years for existing leases, 10 to 20 years for new leases. Their closing is negotiable, typically 45 days. And then their tenants are national brands and strong credit operators. So right here, you got Olive Garden, Chick-fil-A, Firestone, it looks like KFC, McDonald's, Burger King, Oak Street Health, Olive Garden, Chili's. So they have a few things. And I'll just go over it again. Starbucks, Taco Bell, it looks like Firestone, KFC, McDonald's, Vacay, Animal Hospitals, Chili's, Caliber Collision, Burger King, Oak Street Health, Olive Garden, Chick-fil-A, and many more. So I'm going to go over their FFO, because FFO is very important. First, I want to go over their revenue trends. This is annual data in millions US dollars. 133 in 2017, 2018, 143, 2019, 160, 2020, 170, 2021, 199, 2022, 223, and then 2023, 250. So you're seeing an increase in revenue that does have me attracted to them. Remember, funds for operation are very important when it comes to real estate investment trusts. So usually an increase in revenue gives me an increase in dividends with a lot of my investments. So we're going to go further into them. So here's some of their financial results. And this was posted on July 31st, 2024. Okay. So good news is they received rent payments representing a 99.8% of its portfolio. So that's good. So the rental revenue for the second quarter increased 10.8% over the prior year of $58.5 million. Rental revenue consisted of $57.9 million in cash rents and $0.6 million in straight line and other non-cash rent adjustments. So the funds for operations, that's very important. The FFO per diluted share for the second quarter was 41 cents, representing a 0.01 increase compared to the same quarter in 2023. The FFO per diluted share for the 6 months ending in June 30th, 2024 was 82 cents, representing a 0.03 per share increase compared to the same 6-month period. Adjusted funds for operation. So it was 43 cents, representing a 0.01 per share in the same quarter in 2023. Also, AFFO per share in the 6 months ending in June 30th, 2024 was 86 cents, representing a 0.3 or 3 cents per share increase compared to the same 6-month period in 2023. So that's very attractive, but what about the dividend history? I want to see good dividend growth, so let's look over that. So I'm going to start in 2017. You're going to say, well, why are you starting to buy it? Again, it's kind of new. All right, so it kind of went public right around, if you look at the date that I showed you, started like right before the pandemic, and it's starting to be a little stagnant, which is very attractive for me, price per share. So 2017 quarterly, 24 cents, 2018, 28 cents, 2019, 29 cents, 2020, 31 cents, 2021, 32 cents, 2022, 33 cents. And remember, you know, rent's not going to be there when those restaurants were pretty much not in business because of the pandemic. So remember, they got all these issues going on that they encountered, and they did well as a company and as a REIT. They survived very well with that. Saw an increase in revenue. So 2021 quarterly, 32 cents to 33 cents. 2023, 34 cents. 2024, 35 cents. Okay. So yes, you will see a high payout ratio with a real estate investment trust. Remember, 90% plus of what they make go back to investors. So does that surprise me? No. But the dividend growth in 5 years, 3.43%. It's a high yielder. So if you bought one share, you made 138 with a 4.82% dividend yield. Number of dividend increases in the last 5 years is 5. So yes, FCPT is a REIT that I plan on buying, and I'm buying it tomorrow. So I just want to be clear with that. The price per share is attractive, and of course, I'm not giving financial advice. I'll go over that at the end of this video with my disclaimer, but this is one that's really attractive. I will be reviewing a REIT that I don't own, but is another one that's attractive that is related to food. This one is specific on, you know, a lot of restaurants. So, you know, you see these restaurants busy and they have to pay their landlord in these franchises. So still very attractive. And guess what? I own Darden, which is a really nice dividend growth stock. So, you know, a lot of positives right there. So I'm getting money from the landlord. I'm getting money from the dividends, investing in Darden, which is kind of cool. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Take care, I'm having a good one, and I'm going to jump to my disclaimer. So As a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Yes, I will be owning shares of Four Corners Properties Trust. If you watch my previous video, my passive income from QDTE, xdte, rdte, YMAG, and YMAX will be buying Four Corners Property Trust, which is very attractive for me as a dividend investor. I am a high yield dividend investor and hybrid of dividend growth investor. So when you are looking for financial advice, it is best to seek financial advice from a financial advisor or somebody certified to give financial advice. And if you're looking for tax advice, go to your tax advisor or somebody certified to give tax advice. You have to be aware that investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. And I am very excited for this REIT. And I cannot confirm if I'm going to be long in them, but if the trends look good, I will be long in them. Take care and have a good one.